About what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's January 3rd, 2018. Still getting used to that, saying 2018, but I'll promise by December I will be there. Hey, so markets, really interesting things going on there. Gold price stable. Oil is going up. It's up $1 or so today. And, well, what's going to happen with the political scene? Good question. First, email us, be part of the show, kl@kerrylutz.com, Twitter feed @KerryLutz. So Chris Martenson's with us. Chris, Happy New Year.
Well, thank you. Happy New Year to you and all your listeners.
I appreciate that. So, hey, 2017 really did finish with a bang. And here we are, beginning of 2018. And oil's over $60 a barrel, which it was a major performer for 2017. It was up in 2017 substantially. Going to my charts here, I will tell you that WTI was up 12% and Brent crude was up 17%, almost 18%. The big loser was Henry Hub nat gas. There just seems to be too much of that around right now, although with what's happening in the Northeast around the country, I think that supply bubble is going to be diminished greatly. I heard the other day in Massachusetts, they were spot market for nat gas. They're getting $35,000 per million BTUs, which is over 10 times its spot price on the conclusion of 2017. So got some interesting things happening. First, let's talk about energy. What happened in 2017? What do you see happening this year?
Well, look, Kerry, 2017 was the worst year for oil discoveries since the 40s. But let's put this in context. 2017 was worse than 2016, which was awful, which was worse than 2015, which was terrible, which was worse than 2014, which was bad. So we have 4 years in a row. There's nothing in the data series where we have 4 years of oil discoveries this low. So one of two things. Either oil companies have been wasting money for decades, if not 100 years, attempting to discover oil because apparently you don't need to do that anymore. It's a brave new world. It just comes out of the ground now. Yeah. Or what's really happening here is that we've had 4 terrible years of discoveries, which are going to translate into future terrible years of supply. And that's a story that's not really big. It ought to be huge because all this happy talk about decoupling or electric cars, it's all just happy talk at this point in time. People need to know about this, that oil prices, when they spike, they do bad things to economies, but they do terrible things to leveraged financial systems. And that's what we have, an extraordinarily leveraged financial system, margin debt on the stock markets, overall debt levels, auto loans, student loans, internationally, you look at debt to GDP of sovereign nations, doesn't matter. We've never been this leveraged before. I see higher oil prices coming. We're already seeing, I think, the early signs of that here with Brent crude at 67, WTIC at 61. Hey, they haven't been at these prices in a couple of years, and they seem to be going higher. So listen, if we get an oil price spike, by which I mean back over 100, you'll see Greece all over again, right? Greece in 2008, they didn't collapse because the U.S. housing market collapsed. Greece had no exposure to U.S. housing. They had enormous exposure to rising oil prices as a 100% oil importing nation with a heavy tourism industry. Both things cause less cash coming in from tourists, more cash hemorrhaging out because of high oil just to run your own cars. They got dinged by high oil prices, but Greece will be no different than the individual who mistakenly bought an F-150 truck and lives, 90 miles away from his job outside of LA because that's the only place he could afford. Also similarly exposed to higher oil prices. So I think this is the underreported story of the last 3 or 4 years. I think that trend is continuing. Everybody's excited that Bitcoin is up and stocks keep going up no matter what. But let's remember, those are all derivatives. The real economy functions with real people, taking real resources. Most of those come out of the ground, and we do stuff with them. Oil is the most important of them all.
Yeah, for sure. There's you can't live without black gold. That's for sure. And over the past few years, we've forgotten it's black gold. We just think of it as oil. but crucial to the economy, biggest industry arguably in the world. And what's going to be if it goes back up to $100 a barrel? What are we looking at? We looking at countries going bankrupt again, like you said, like Greece, or where are we going to be?
Yeah, every marginal entity, which I would include junk-rated companies, people on the lower end of the socioeconomic spectrum, weak countries, whatever they happen to be, they're the ones who get impacted first. They're the ones who are barely hanging on by their fingernails. All their disposable income is already spoken for in whatever fashion, and oil becomes a tax. And so if you suddenly had no extra bucks to spare and suddenly you have to spend 10% more of your disposable income on gasoline or diesel, which are non-negotiable items for most of these entities, right? You know, Greece doesn't suddenly say, you know what, we'll just take in half the oil and save money. Doesn't work that way. And so what you would expect to see is trouble at the margins. So that's what we would expect to see. But with these levels of indebtedness, you know, Kerry, the theme is that the central bankers have blown the most massive bubbles everywhere. We saw it in a $450 million price for a supposed Da Vinci. We see it in Bitcoin and all the related coins just going absolutely stratospheric as people chase those. We see it in property prices all over the place. And yes, we see it in the asset markets, stocks and bonds, both. The biggest, most gigantic failure of the central banks, besides believing they could print us all to prosperity, was failing to see asset price inflation as inflation. Where's our inflation? Well, if it isn't in milk, it's somewhere. And it's absolutely, we've been experiencing enormous inflation. And, my theme for 2018 is going to be the central banks lose control of that narrative or begin to, and that we really get to the other side of this story.
That's remarkable. And you think about it, so much stuff happens here, just so many things go down, and yet somehow it gets missed always. And I guess it's like everything happens for the first time in this country, right? Everything, right? It just, nobody sees anything coming, but it's so obvious, isn't it?
Well, it is. It's completely obvious. And, honestly, kids have an easier time working this out than adults, because a lot of adults, they have belief systems. They've been prepackaged and sold to them. They don't even understand that they've been given a set of beliefs. Maybe it's about, Russians are doing this kind of a narrative, which is busily falling apart. Maybe we could get to that in a second. But, kids don't have as hard a time because they're not invested and wedded to this idea that as long as the stock market's going up, I'll have a shot at retirement. So I'm going to really believe in that story. But if you just sit a kid down and you say, hey, look, whether it's equities, which are a claim on future dividends, or bonds, which are a claim on future cash flows, or it's government promises, which are a future idea of what you're going to be getting. All of these things are claims on the future. They're growing at 2 to 3 times the rate of our economy. And oh, by the way, there's only so much stuff in the world in the first place. And some things are now in limited or limiting supplies. That includes water in some regions. That includes fish in the ocean. That includes soil nutrients. That includes oil, things like that. Kids don't have a hard time working it out. They go, oh, yeah, no, you can't have something growing forever. But these stock markets are a promise that the future is not only going to be bigger than today, but a lot bigger, and that we will never run into limits. And that's just not a story most people can believe in if they're willing to set aside their belief systems and just look at the data. It's clear.
Well, can the market solve these problems, or are we just screwed?
Well, markets could solve problems if the markets were markets. So let's look at the most important market of them all, the price of money, right? So if you or I only have $100 between us and we've got 3 neighbors who all need that $100, you and I are going to do a pretty good job of figuring out which neighbor, why, or maybe split it up, or what the terms will be. We'll come up with a price for that money and we'll work it out. Markets do a great job of figuring that stuff out. Do they always get it right? No. Obviously, they're a little too high sometimes, a little too low other times. But what the central banks have done, Kerry, is they've distorted and destroyed destroyed that pricing mechanism because they've decided they know what the correct price for money is. And it's zero, right? So once the central banks have set the price of money and enforced that, crammed that into the throat of the financial markets, they've distorted every decision that follows along. And then you and I get to sit back and chortle and go, well, isn't that odd that European junk debt is now trading with a yield of under 2, less than U.S. 10-year treasuries? What sane market comes along and says, you know what, those really crappy Euro companies deserve to pay less for money than people who are lending it to the U.S. government for 10 years? That makes sense. No, that doesn't make sense. But that's just one example of, like, by the time things are that distorted, Kerry, that people are paying, giving money to junk-rated companies in Europe for less than 2%. You can imagine how many other distorted investment decisions have been made and how many other units of capital have been betrayed into hopeless enterprises, and so this is an old story. We've been here before, but once your central banks have taken it upon themselves to destroy the pricing mechanism by setting the price for money again at an unnatural level, it's very difficult to predict all the ways that will sort of bubble out into bizarre things that we might call, Bitcoin, or we might call, U.S. equity markets, whatever. But what we can say for sure is that with a broken pricing mechanism, mistakes are made. And bad decisions are come to, because garbage in, garbage out. Bad price for money. Don't know how you're going to make a correct decision going forward. And in some cases, people don't have any choice. You're a sovereign wealth manager for Norway, and you have to put 60-40, bonds to stocks, and you got cash, and you got to put it into bonds, and they have to be in Europe because that's how your rules are written. You can be the most intelligent person in the world and still be forced to make a bad decision and end up putting part of your sovereign wealth fund into European junk debt because you have to.
Yeah, I guess what choice is there? So it sounds like there's going to be a collapse or something resembling a collapse. What's going to happen here? How are we going to know it's happening?
Well, for now, we're in this, a still expansive bubble stage. Central banks are still printing emergency levels of money. This European Central Bank has made noises about reducing their balance sheet expansion, but it's not in the data. They're still expanding it at as fast as they ever have. So when we have collectively over 140 billion a month of fresh thin air money, mostly courtesy of Japan and Europe, flowing into the markets, you're going to continue to see these weird pricing behaviors. Things just shooting up no matter what. But you use the word collapse, and I think it's appropriate here because what we really have is a huge, gigantic debt bubble. It's extraordinary. And the central banks are deadly afraid of allowing that to begin to deflate. They don't know what to do. So they're still expanding. Don't listen to their words. Watch their actions. Somebody can tell you how pious and upright and everything they are, but if they're continually stealing money from you, maybe you should trust the action. So the central bank's actions say, we're scared. We want to keep inflating these markets. Fingers crossed, double fingers crossed, wish upon a star. They need global economic growth to come roaring back to save their bacon in this story. But guess what? Every time we start to get actual growth, the price of oil shoots up, and the next thing you know, it crimps that same growth. So we're just at a story where too much debt, too few resources, too many promises. You can't make that equation work out. So guess what? We're just at that diluted stage where everybody's kind of hoping against hope this works out. If it doesn't, guess what? That's when, the tide goes out. We find out who's swimming naked. We discover that lending money at 2% to European junk-rated companies was a bad idea. And all that money is already betrayed and it's lost. So really, in the next part where you say collapse, that's really just a function of people suddenly discovering where they've made really bad decisions. And it's not like that's recoverable. That money's gone. And so the question is, how do we figure out who's going to eat those losses and where do those losses really sit? So central banks printing like crazy, hoping against hope that somehow this all works out. But if it doesn't, we go down a route where we discover lots of losses have yet to be realized.
Hey, so what about the political situation? What impact is that going to have on all of this?
Well, Well, this is pretty fascinating time watching. I've been absolutely astonished at the ease with which this so-called Russian collusion narrative has been able to be spun and used against the current administration when there's never been any evidence for it. I mean, how many months of digging has there been? And there's no evidence yet being presented. Meanwhile, there was extraordinary amounts of evidence, hard evidence that the Clinton campaign had misused, top secret emails, had set up a private server, done things that if you or I had done them were clear, obvious statutory violations and felonies. So that's starting to unravel, and so I don't know how to look at this yet, except to say that the whatever deep state apparatus was out there and sort of running behind the scenes, playing fast and loose with what you and I might call justice, and that could have some really major impacts depending on how it shakes out. All things being equal, you and I will not be surprised to discover it all gets swept under the rug and nobody gets charged and maybe somebody has to retire early. But if it goes further than that, and if actual criminal charges start coming out, that's when you get to see the cockroaches all scuttle away from the light, and people who are in danger of going to jail suddenly have very loose lips. So you could actually see this snowball into something if it goes that direction. But I won't be too surprised to discover it all gets swept under the rug.
Yeah, well, we've seen all this happen before, right? There's nothing new under the sun here. What of it, though? How do you protect yourself in this situation, Chris? What are we supposed to do?
Well, I think we all have to understand that there's a chance of all of this stuff boiling over at some point, by which I mean mistakes will be made. And, it could be a war with North Korea. It could be it looks like there's a lot of drumbeats for getting into a war with Iran. There's still obviously a lot of tension with Russia. Russia's over there, just looking at this whole thing as if we've just gone nuts. Maybe we have in the West. So at any rate, being nutty and being in highly unconscious behaviors and getting into this sort of blame and game and lots of emotions and all of this and that, those are where mistakes get made. So I think the way people protect themselves is understand that we are as close to a World War I situation as I can find, meaning nobody can quite explain why the tensions exist or what'll happen. And if it resolves in war, that's where all sorts of things break down very, very suddenly. So you need to be prepared for the idea that things could break suddenly. Our markets, I have to use air quotes, Kerry, when I say markets, they're not markets anymore. They're run by computer algorithms. It's almost entirely computer trading. It's an ecosystem of software packages, all sort of competing against each other that are violently fast, and they will all work fine as long as everything's stable. But something like war or a major political upheaval or something that can come along would create an unstable market, and these computer systems will just disappear and take their bids with them. So we could see very, very fast market declines or gyrations or increased volatility that would shut markets down. So my advice to people is have a lot of cash on hand. Make sure you're prepared. Understand what you really need to be resilient. This is not a time to be super aggressive in going into debt or borrowing or levering up or all that stuff. Save your cash. And the best advice I gave anybody over this holiday was just don't buy anything, just stop. Don't buy anything unnecessary in particular. So I think this is a time for people to understand just how quickly things can change. And I don't, whether this starts tonight or it doesn't start for 5 years, when I'm looking at just the oil data alone, I see shortfalls starting around the year 2020. And the only asterisk in this story is unless a really great global recession/depression comes along to kill demand first, we're going to run into an oil supply shortfall because we haven't discovered it. Means we won't be pumping it in 5 to 7 years. Yeah. So that's coming. That'll be an oil price spike. That will shred a bunch of financial markets. How bad and ugly that gets, nobody knows at this point. But I'm looking for another financial accident / recession that will be worse than 2008, only because everything is so much larger and more grotesquely distorted now than then.
Well, that's for sure. I mean, what have we done in the past 10 years? We've just kicked all the cans down the road, and the road is running out.
Well, yeah, and shame on the central bankers for using the markets as signaling devices to tell everybody everything's okay, which shortfall, and shame on the people for not seeing through that, I guess, too. But for a lot of people, rising markets say everything's okay. There's really nothing to worry about. And it really short circuits the harder conversations we actually need to have and all of that. So I think the central banks have made extraordinary mistakes. I am on record as saying I think they should be held accountable. I think they knew better. It's absolutely stomach churning to me to see Janet Yellen come out and say, oh, we don't know why the wealth gap exists. It's troubling. No, it's not troubling. It's the outcome of your policy decisions. You created it and you did it on purpose. And so the damage that's coming was all done because the central banks purposely tried a binary experiment, but I wish binary makes it sound even, Stephen, black or white, 50-50. Their binary experiment was either the marble on the roulette table lands on this little green square or we're screwed, right? And that's really where I think we're at. It was like a wholly, wildly inappropriate, poorly conceived attempt to get out from the consequences of their prior bad decisions. 2008, Kerry, that's where it went bad. We should have sat back. We should have let Citi go tits up. We should have let JP Morgan go down. Goldman Sachs should have gone out of business. All the bondholders and equity holders in those companies ought to have taken massive losses. We should have said, yeah, do your due diligence. Better luck next time. Do not invest with criminal organizations.
Right.
And it would have been bad, but we would have been on the recovery side. Now it's so stretched. I'm really worried that this isn't we lose a couple key institutions. Yeah. This time the social fabric gets shredded and maybe we lose geopolitical cohesion. That's what I worry about.
Yeah. Hey, there's a lot going on. And, well, will 2018 be the year? That's the question. And we're going to find out. Hey, Chris, just tell us best place to find you these days.
Hey, that's at peakprosperity.com. Stop on by. We have a subscription news service for those who like to go deeper. Most of the information is for free. And if I could, I'd just like to tell people this is our 10th year anniversary in business. We're having a seminar out in Sebastopol, California this May. And that's May 4th, 5th, 6th. That's Friday through Sunday. It's going to be great. And you can find out more about that at peakprosperity.com/seminar. And I'd love to see anybody who'd like to show up for that.
All right. Well, hey, good luck with that. And congratulations on the anniversary. Hey, be part of the show. Send us an email, kl@kerrylutz.com. If there's anything here that interests you or not. And don't forget, our Twitter handle is @KerryLutz, and our Facebook page is Financial Survival Network. Chris, we will talk to you again real soon. Be well.
Thank you. You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial